cannot find consistency simply due to the fact that they cannot follow a single system. Let's go ahead and learn my fractal model. Now this model is built off the fact that price cannot reverse without a swing point. If price is going to go from a bearish trend to a bullish trend, it's going to form a bullish swing point. If it's going from a bullish trend to a bearish trend, it's going to form a bearish swing point. Now, if we look for these swing points to form at a point of interest and look for certain candle closures, we can anticipate expansion candles that follow. Now, the first thing we need to do before we get into the lower time frames is come into the day with a daily bias. We're going to do this by simply looking at the daily closure. If price has a closure outside the range, we're going to be looking for a continuation. So you can see here with a bullish continuation, price closes over its previous day high, so I'm looking for price to continue higher. And here you can see with the bearish continuation, price closes below its previous day low, so I'd be looking for a continuation lower. With a reversal closure, we have price sweeping out its previous day low and closing back above that low, showing that price has reversed off that low and we can anticipate a continuation higher in the next day. With a bearish reversal, price has taken out its previous day high, closed back below that level, and then I can be looking for a continuation that following day. So once I have a daily bias, then I'm going to look for structure and a swing point formation. So how do I go about this? Well, here you can see we have a bullish daily bias through previous day high as price has closed over its previous candle's high. So looking for that, I'm going to be looking for a point of interest for price to react out of. So I'm going to look for that in the previous range of the previous day. So here you can see looking in this range here, we have a fair value gap. Now points of interest are always going to be either a fair value gap or a low in a bullish scenario, or a fair value gap and a high in a bearish scenario. Then I'm going to want to wait for price to reach into that point of interest and have either a candle 2 or a candle 3 closure, which if you don't know what those are, I do have videos on those topics. So here you can see we have expansion, price retraces into this fair value gap, has a candle 2 closure, and we have a draw on liquidity, which is our previous day high. So with this, I would want to go down to the lower time frames, and then I'd look for a fractal model. Now, very simply, we're going to go down to the lower time frames using our time frame alignment. So for instance, if that swing point was on the hourly, I'd be using the 5-minute. If it's on the 30-minute, I'd be using the 3-minute. Now, we're going to check to make sure we have a change in the stated delivery, which confirms this swing point, but we're not going to enter on that change in the stated delivery. We're going to wait for another continuation. So what I'm going to do is let some structure form. Here you can see we sweep out a low into a fair value gap, so we have that point of interest, and then we get to close through the series of down close candles. This is a continuation order block, which I also have a video on. Once I have a continuation order block that forms, I'm going to look to enter on that close through, my stop on that protected low, and then look for 2R.